Hey, what is going on, guys? Edward here, back with another video. On today's episode, I wanted to make this video quick. I don't want to take too long for this one because it's basically something that we should understand, and people are misunderstanding now. People who are actually seeing the new ways, this concept of that is being like very trending right now. It's all over Instagram, it's all over YouTube, it's all over the place right now with this smart money concept, right? It is just a concept, like a retail trader, right? Right here, we can see we have two exact scenarios, okay? This is the same scenario. I just copy and paste right here. Basically, two different scenarios, two exact scenarios right here. I'm sorry. And there are two ways of trader, two type of traders, okay? The retail trader, which normally would trade the breakout of the flag, right? Will normally wait for the breakout of the flag, enter on the breakout, and the stop loss below this low, and perhaps TP 122, just an example, right? Which is, in this case, it would be like part of the TP strategy based on my strategy, right? On the breakouts. But anyways, forget in this case about the TP strategy. It's just that retail traders will look for a breakout of the strategy. This is how a retail trader would actually look to get into this flag. They will wait for the breakout, right, to jump in. Now, on the other end, on the other interpretation of the chart, a smart money trader will actually wait a bit more, and they will look in the past to see if there is a potential order block. Sometimes, I'm gonna draw it right here. There's an order block right here, most likely. And a smart money trader is just waiting patiently for the market to actually touch the order block before buying. So look at the big difference right here. Normally, a smart money trader will wait for the market to hit that and then go high, right? And a retail trader will actually enter on the breakout. Both strategies are fine. I'm not saying that a retail trader is no longer profitable. A retail trader will never be able to make money. No, that is not true, okay? Retail traders, both ways of trading, this is just how some people are interpreting the market. Basically, this is two different interpretations of the charts. And this one, right? So you have retail traders and you have smart money traders. What's the difference, of course, right here? If, two traders, they're all risking the same. They're all, even though this stop loss looks a lot bigger, they're normally risking 2% per trade. That's what you should do. Even if you're doing a smart money trade, you should be risking maximum 2% per trade, okay? Don't think because this is huge right here, you should not, like you're gonna be risking half of your account here or 25% of your account. No, all right? A retail trader, a profitable retail trader will still risk only 2% and be looking for perhaps a 4% right here on return, okay? So 2% risk, 4% return, right? And now on a smart money trader, of course, you got a lot, a much more bigger risk to reward. That's why it is very attractive, because it gives you a much more profits, right? Instead of waiting for the breakout, you see, you pretty much, you wasted all this push right here, and you're entering, kind of late, right? It looks like it is a little late, but that's how retail traders will prefer to jump in. They will wait for the breakout of the flag. On the other end, the retail trader will wait for either some type of manipulation, because sometimes you may see maybe that, let's say this is not the best flag, maybe just this is a very choppy flag right here. Let's say this is something like this, maybe even like this, right? It is just something like that. So in understanding, okay, maybe this is definitely a flag right there, right? Now what a smart money trader is seeing is most likely this. This is what a smart money trading is seeing, perhaps. Right here, there was a sell opportunity. There is actually liquidity above this highs. So we want to place this thing here as the liquidity. And most likely, at this point, there was actually an order block. You see this little push, this little high right here? higher than this high, this could have been a liquidity grab. The market activated this order block, this supply zone right here, and they are actually selling. Okay, they're most likely going to be looking for a sell. To where? To perhaps a much bigger order block, which is right here. So they most likely will be going in a sell to that point. Now, what you're seeing in this scenario, it's also below this equal lows right here. There's liquidity also, right? It's money sitting below. So what is the market doing? The market will wipe these guys out, touch the order block at the bottom right there, and give you that entry opportunity to go buy. So that's basically what a smart money trader will look. It will wait sometimes, or need to have a little bit more patience to actually wait for the manipulation to come in and then enter, right? By placing perhaps some buy limit orders, especially buy limit orders or sell limit orders. That's what they do. Okay, now as I mentioned, two ways: retail trader, smart money trader. Is basically you have it's two type of interpretation of the charts. Okay, and just so you know, smart money trader or smart money concept, people are saying that, oh, this is how the banks trade. There's nothing, guys, that is actually confirmed. Okay, there's nothing out there. The banks are not just going out and saying, oh, this is how we trade. This is definitely how we trade. We do manipulate the market. They're not saying that. Okay, of course, this type of concept, after you start trading it, you will realize that, hey, there's definitely something out there. There's a very strong force that is causing this type of manipulation. It's either the market makers or, some people who has a lot of money, like Elon Musk, guys with a lot of money. So who are the guys with a lot of money? Banks, right? Big institutions. So these type of manipulations, they do happen, of course, but there's nothing, what I'm trying to say, there's nothing confirming that smart money concepts or this type of method, this type of interpretation, it is not how the banks trade. Okay, there's nothing saying out there or confirming that this is how they trade. This is just a concept. It's kind of like a myth, but it is nice to know that by trading this concept, the market will give you, definitely you can have really nice risk to reward ratios. Okay, for that I'm just gonna go and just give you some real life example here, just to make this video quick, as I mentioned, just a short explanation. So right here we're having a US 30. I'm on a 15-minute time frame, and just basically this, right? We're having a nice, like, price has been pushing up right here. We're seeing that all of a sudden in this push right here, you see that huge skyrocket right there. It started consolidating, then it started dropping a little bit right there. So in this case, in this area, we can actually see that there is some type of flag. You can even do it this way. I normally draw my flags with a little space in between. Similar, like, for example, if I'm drawing a box, right, a zone like that, I know it's an area, right? If I'm drawing a support or resistance, I normally cover an entire zone. So anyways, right here, of course, the previous candle before the big push to the upside, that's definitely looking like a nice order block right there. So this is the scenario, right? We have a bullish flag. Normally a smart money trader will look for the entry. Hold on. We'll look for the entry at the order block. They will wait for the order block to be hit, right? Retail traders, they will actually wait for the breakout. If they are spotting if they already draw that channel, they will literally wait. So they want to see the first candle, the body of the candle closing above the channel, right? Above that flag, that's the entry. And the stop loss below here, right? TP in this case, let's say, just for this example, let's say 1 to 2 risk to reward. Now look at the difference here in this case. The smart money, the retail trader, you were looking for just a 1 to 2 risk to reward. If you're entering, even if you want to just aim on a smart money trader, you just want to aim the previous high, which is normally the target from a smart money trader, right? That's basically your target. It would have been a 1 to 7, right? 7.66. So that would have been a really nice risk to reward on that one. You see, it's a very early, like the market barely touches your entry and it skyrocket after that. Okay, it may not happen all the time, but if you know how to spot this type of things very well, yes, you can get huge amount of, like, your risk to reward normally is huge. And instead, on the other end, the retail trader, like this day the market really struggled right here, and perhaps give you that 1 to 1 risk to reward. Maybe after the 1 to 1 risk to reward, you place that thing on break even, and what happened? Prices stop you out on break even. You see, so you only took that 1 to 1. That's it. Price stop you out after that. Okay, and then smart money trader, you know, at least the market, they got in very early and they got out as soon as they hit the previous high, this previous high right there. And that's it. That's all they're looking. Okay, yes, you can still aim higher if you want, whatever. You can make this a 1 to 20 risk to reward based on what, of course, where you are located. But understanding, and well, sometimes let's just try not to be greedy in this case. If you want to just aim it all the way just to the top right there, just barely touching that one, that's you want to just do it that way. You want to make this high your actual target. That is it. That is what you should be looking for. But here we go. You have two interpretations, same scenario, same flag, but different ways of entry. Both are just the same, like, not the same. They are right. Both, they are right. There's nothing wrong when entering on the breakout. No, there's nothing wrong. It's just that, of course, normally the risk to reward is a lot less. All right. So it's up to you. Whatever, whichever way you want to trade, you want to be a retail trader, you still want to trade the flags, you still want to trade as a retail trader, just simply, let's say, just breakout, retest, continuation, right? If you want to trade like that, there's nothing wrong to it at all, okay? Just understand that is just another concept. You decide if you want to be a retail trader, a smart money trader. You are the one deciding, okay? And that is basically it for this video, guys. I just wanted to give you this short explanation. I hope it makes sense. If you had doubts, questions, just let me know. Let me know in the description below if you have some questions regarding these two methods. If you are interested in learning these two methods, I am offering a course, right? I'm offering a bundle right now, which comes with my course, mentorship, and a VIP signal group for life, okay? It's a one-time payment, and you are part of the team forever. There's a 20% discount right now on my website. Go teamprofitsenglish.com, and you find out the information in there. That would be pretty much for today, guys. Give it a big thumbs up. It motivates me to keep posting videos for you. I know you like this type of content, and if you're new on the channel, please subscribe, and I'll see you in the next one. Take it easy, guys.